Ladies and gentlemen, good day and welcome to Rathi Steel and Power Limited Q4 and FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Udit Rathi, promoter, Rathi Steel and Power Limited. Thank you, and over to you, Mr. Rathi.
Good afternoon, everyone. I would like to wish you all a very warm welcome to Rathi Steel and Power's earnings call for the fourth quarter and full year ended 31st March 2025. I would like to begin by expressing my gratitude to all of you for taking the time to join us today. We have on call with us today Mr. Rajesh Jain, who is the president of our company, along with Mr. Rajiv Kumar, CFO, and Adfactors, our investor relationships team. We are at a pivotal point in our growth journey as the company is in a transformative phase. Since this is only a third earnings call, and for the sake of those who may be new to our company, I'd like to share a brief background along with some recent key developments before we dive into our business and financial performance. The roots of the Rathi Group trace back to the 1940s when it began with a small rolling mill under the leadership of a founder, late Shri Poonam Chandji Rathi, who brought with him 6 decades of experience in steel making and rolling. The business steadily expanded over the following decades. Formerly known as Rathi Udyog Limited, the company was incorporated in 1971, starting with a small unit in Ghaziabad, Uttar Pradesh. In 1973, we did our first public offer, followed by 2 rights issues until 1993. During this period, we adopted the TOR technology to make steel rebars, which became one of the first, and we became one of the first companies in India to be doing so. Over the time, we continuously advanced our technologies to make TMT bars. Around 2006-07, we began establishing a specialty steel unit in Ghaziabad, primarily to make stainless steel products, and also set up an integrated steel plant with a captive power plant in the state of Odisha. In our ongoing efforts to optimize our operations, we undertook several modernization initiatives with major upgrades completed in 2011-12 and 2024. Today, we proudly operate a state-of-the-art facility spread across approximately 12.5 acres of land in Ghaziabad, enabling us to produce end-to-end solutions from steel making to refining and casting to rolling various categories and grades of steel products. Our product portfolio primarily comprises of stainless steel billets, long products of stainless steel like wire rods, and also small quantities of flat stainless steel products, along with various items of stainless steel under development. Over the years, we have carved a niche and built a strong presence in the segments we serve. We also have a very strong hold and presence in the TMT bar space, which is primarily used in the construction and infrastructure industry. The brand Rathi for TMT stands for quality, consistency, and reliability, and is a preferred choice for numerous infrastructure and construction projects across NCR, and also for a large number of retail clientele. Now speaking about some of the key developments in recent times. We recently announced recommencement of commercial operations of our TMT mill division, which was remaining idle for a few years. This facility is dedicated to the production of TMT bars, which is a key component in construction activities. This product will complement our stainless steel portfolio and help us to utilize our idle assets to the fullest. There is sufficient demand for this product, and we can leverage our capacity towards catering to this demand. This move is a strategic move. It also helps us to substantially improve our brand visibility and reach, and also widens our portfolio, strengthening our position in the overall steel industry. Recently, in April 2025, we also took a temporary shutdown for about a couple of weeks for our steel melting shop at Ghaziabad, which was carried out essentially for revamping and refurbishment and replacement of certain critical equipments. This facility plays a critical role in producing steel billets and it is a key product for us, and hence we thought it prudent to sort of take a shutdown and refurbish it. We have already resumed operations at the steel melting shop and are seeing better efficiency since then. On another note, we have received a license from BIS covering the entire range from 8 mm to 32 mm to roll out, which will make the rollout of our stainless steel rebars more effective. We've also received a similar license for the mild steel TMT bars that we've already started to commence, and it allows us to service a large number of customers in North India for these product categories. In fact, stainless steel rebars are going to be a pan-India presence is what we are looking at. Aligned with the sustainability goals, we implemented cost and energy optimization initiatives, including a direct charging facility of stainless steel billets to wire rods, making us the only company in the country to be doing so currently. These efforts complement our recent plant modernization, positioning us well for future growth. Looking ahead, we plan to ramp up the capacity utilization of a steel melting shop, which is presently operating at about 60% as on FY'25 to about 80%. Once this is achieved, we will definitely be looking at further expanding the said capacity. Restarting of the TMT bar mill also enables us to substantially improve the capacity utilization of our rolling division, which was a part of which was remained idle, as I explained earlier, substantially from presently about 25% because part of being idle to close to 60-70% in years to come. Speaking about the market outlook and industry at large, the Indian steel industry is facing a dynamic environment shaped by both domestic developments and global trade shifts. On the domestic front, the government-led infrastructure push and capex, particularly in sectors like roads, urban development, renewable energy, are expected to drive demand for steel. Central government capex has been maintained at 3.1% of GDP, reflecting continued support for construction and infrastructure projects that are very, very steel intensive. However, global headwinds pose challenges. Notably, the US's renewed tariff actions, particularly against Chinese imports, are leading to an influx of cheaper Chinese steel into India, adversely impacting domestic pricing. According to CRISIL, Indian steel prices, particularly of flat steel, have declined by more than 10% in FY'24 due to rising imports from China. The threat of dumping remains a key concern, especially if India does not implement strong trade protection measures. The government, as we all know, has already initiated a 12% safeguard duty, which at the moment doesn't seem sufficient to sort of safeguard the industry to the levels that we would want to. And the various steel associations are in touch with the government to further enhance the same. India's strategy to expand value-added manufacturing and push domestic production under the PLI scheme can offer a long-term buffer. However, the short-term scenario may remain volatile due to tariff wars, import pressures, and global demand uncertainties. Overall, we are focused on improving capacity utilization and expanding our range of value-added stainless steel products, along with expanding our brand visibility by the recent recommencement of TMT bars. We are well positioned as Rathi 2.0 for a sustainable growth, and we will be seizing emerging opportunities while delivering good returns to our stakeholders. Together, we are building a stronger, more future-ready organization committed to achieving new milestones in our journey. I would now like to hand over to Mr. Rajesh Jain to take us through our financial performance.
Good afternoon, everyone. I'm Rajesh Jain. I will take you through the financial performance for the quarter as well as for the full year. We have reported rupees 149.57 crores in revenue during Q4 FY'25, a 26% increase over year-on-year, plus improved realizations from SSMS billets during this period helped boost top line. Our EBITDA excluding other income for the quarter stands at rupees 7.90 crores, around double of rupees 3.95 crores reported in Q4 FY'24. EBITDA margin improved 194 basis points to 5.28%. Operational and energy efficiency measures coupled with raw material prices helped improve EBITDA margin. Our PAT during this quarter is rupees 3.80 crores with PAT margin at 2.54%. It is noteworthy that the rupees 20.13 crore of PAT in the fourth quarter of FY'24 included rupees 19.80 crores of one-time exceptional item. EPS for the quarter is 0.44. Coming to the full year performance, our revenue for the full year came in at rupees 503.15 crores, vis-à-vis 493.19 crores in the previous corresponding period. Better realizations offset the lower volume due to planned shutdown. Our EBITDA excluding other income for the full year stands at rupees 22.03 crores, while EBITDA margin grew at 9 basis points to 4.38%. The power efficiency and operational efficiency measures undertaken during the year helped offset the impact of volatility in raw material costs. Our PAT during this period is rupees 13.95 crores with PAT margin at 2.77%. As mentioned earlier, that rupees 23.53 crores of PAT in FY'24 included a one-time exceptional item worth rupees 19.80 crores. EPS for the year is rupees 1.62 crores. This is all from our side. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mehul from 40 Cents. Please go ahead.
Hello, sir. Thank you so much for the opportunity. I have two questions, sir. What is the capacity utilization right now?
So I'll split that question into the answer rather into two parts. So our steel melting shop, which produces the basic steel, which is further rolled into various products, has a installed capacity of around 90,000 tons per annum. So that implies around 45 to 50% of backward integration facility in order. That means that our rolling capacity is about 2 lakh tons, 200,000 tons, out of which we have a backward integration support of around 45 to 50%. The steel melting shop is operating at about 60% as on FY'25. And the rolling capacity was at a very low level because one of the plants was idle, the TMT plant, which we recommenced in April this year. So primarily, we are looking at raising the capacity utilization overall from 60% of the melt shop to 75-80%. And the moment we achieve that, we'll look at further options.
Right. Thank you, sir. Sir, the next question is about the financials of the organization. I can see I am looking at the last 5 years trajectory for the net profit. It has been, if I look at it from 2021 onwards, it has been very volatile. So we have reported 190 crores of profit in 2021, and in 2022 we were negative 36 crores. Then again we were positive 87, then we were 24, and now we are 14 crores. So can you please throw some light on what has led to so much volatility? I understand there is some industry headwinds, but I don't think this is because of the headwinds. So I'm new to the organization I'm tracking. So if you can please throw some light on this,
Yeah, I think if you want to connect with us for a detailed discussion on this, you're most welcome. But I'll just throw some light on it. So basically,
sure, I would connect.
Sure. So basically, you should be looking at what we have been achieving over the last 4-5 years or 3-4 years at an EBITDA level. When we talk of the PAT level, it has for various of these years have an exceptional or an extraordinary item, which relates to basically our settlement and restructuring with the lenders. So largely because of those extraordinary items, there is so much of a volatility. You can see so much of it being volatile. Otherwise, at an EBITDA level, it's kind of range bound for the last 3-4 years, 5 years.
Okay, sir. So it is helpful. How can I connect on a one-on-one basis?
Sure, you can take our contact details from Attractors, who are a relationship team, and so it must have been a part of the invite also. They'll get us connected to us. Not an issue at all.
Okay, sir, I'll do that. And I have a follow-up question again. I'll join the queue again. Thank you.
Sure.
Thank you. The next question is from the line of Rakesh Roy from Boring AMC. Please go ahead.
Yeah. Hi, sir. My first question regarding, sir, your TMT bar. So you have just started, how much the capacity now and how much we are targeting? How much the monthly run rate currently?
The installed capacity of that unit is about 1 lakh tons per annum. So the total rolling capacity is about 2 lakh tons. So I would say, so we have two separate rolling units within the same complex. So the installed capacity of that unit is about 1 lakh tons. We just started that, in April, and obviously the initial days takes a bit of a time to sort out the teething troubles and to align our processes and the manpower, etc. And then obviously to rejuvenate our brand also and our dealer network also takes some time. So we are presently operating that at about 25-30%, which is just the beginning that we have done. And we definitely aspire to achieve, let's say if I talk of a 2-year scenario, FY'26 and 27, we are looking at running that plant at least 60-70% utilization. And
Okay.
it is a strategic call. It helps us to rebuild our brand and also helps us to look at rolling out stainless steel rebars from the same mill. If the normal mild steel rebars are made along with it, it helps us to curtail various costs.
Right, sir. Great, sir. So second question regarding same TMT bar, sir, as a Delhi, sir, last time Delhi increased the budget. So do you see any increase or any improvement in infrastructure in Delhi or in the surrounding area?
Yeah. So basically our target market is NCR, and there is because of the reality boom here, the way Gurgaon, the way regions in Haryana are expanding, or the various projects coming up in UP also, Noida. So we are quite bullish on the demand front with respect to coming in from these basically reality segment. Also our brand, we are one of the licensees to use the brand Rathi, the company, and the market has a very wide brand recall. So we are definitely going to be expanding our retail outlay as well. As on date, our target areas are retail and the reality segment. We have yet not pushed ourselves to the various infrastructure projects of NHAI, etc. as on date. But we will be looking at doing that also in times to come.
Okay. Sir, last question is regarding, sir, we get, sir, for 8 to 32 SS bar. So this production, when will the production will start from SS bar, sir? Or what is the outlook, how it works, sir?
Yeah, so it is a product which is evolving. As I said, I don't, to the best of my knowledge, I don't think anybody in India has attempted to launch it in the retail space. It is primarily projects driven in coastal areas where government has sort of made certain constructions over water mandatory to be using stainless steel rebars. But those kind of projects have not yet opened up the way the industry would have liked in terms of the volume pickup there. So we are targeting that segment obviously because that is where there is already a market in order. But we are looking ourselves to sort of challenge ourselves a little more and launch it in retail. So we've already rolled out the products, and that is why we got approvals. But once the rebar is made, it requires a certain treatment over the surface, etc. So certain facilities in relation to that. We outsourced that earlier, but now we are contemplating to either outsource it or build it up in-house. And that is taking a bit of a time, but we are expecting now with the approvals in order, we are expecting it to sort of launch it soon.
Right. Okay. Thank you, sir.
Thank you. The next question is from the line of Mehul Panjwani from 40 Cents. Please go ahead.
Sir, my next question. Thank you for the opportunity again. So, sir, how much do the debtors hold the shares of the company?
How much is, sorry?
How much of the shares is held by debtors?
Debtors? By debtors? I didn't get it.
I mean, we have. Yeah, I just went through some of the some time back that State Bank of Travancore had given us some loan, and are they holding any equity?
You mean the lenders? Okay. So
lenders. Sorry.
Yeah, no problem. So the lenders who are currently holding, I mean the banks who are, they're not my lenders anymore. The banks who are currently holding the shares are nothing to do with any sort of a conversion of debt into equity or any sort of a commitment from the company side. It is purely a market-driven purchase that they may have made. And the lenders they're not lenders anymore. The banks, the scheduled banks who are currently holding the shares are no longer my lenders.
Okay. And who were the lenders earlier before we settled this?
Yeah. So Canara Bank was one of the banks who continues to hold certain shares. That's what I sort of get the information from my team, and they were my lenders earlier. But as I said, those holdings are purely sort of a treasury operation for them. It's nothing to do with any sort of a debt which was converted to equity or any placement which the company had done on a private basis. Nothing of that sort. So I think Canara Bank is one of the banks holding. I think Bank of Baroda is also another bank which is holding some shares. I mean, that's what I know offhand.
Right.
If you want anything specific, we can sort of get back to you on that. But as I just like to clarify again that firstly, when they were holding also, it was not part of any sort of a restructuring thing. And currently, they are not my lenders. We've all paid them off.
Okay. Sir, one question regarding your segments which you operate in. So if we were to have a segmental breakup in the steel products, can you give me like how much is stainless steel and how much are the bars, etc.?
Sure. So as I said, the mild steel TMT bars, we started operating it in April 2025, so which is this current fiscal year. Last year,
right.
Most of our operations were from stainless steel. They must have a very small component of some processing or value addition of TMT bars, which we may have bought and sort of added some value and sold it. But I would say more than 95% of our sales would have been safely stainless steel only. So going forward, assuming that segment remains at the level that we are operating, although as I've said that we want to increase the capacity utilization there as well. We are operating about 60%, which we want to increase. So whatever revenue we are going to be adding from the TMT bar segment is going to be an incremental revenue of what we have achieved over the last couple of years, because there was hardly any component of TMT bar sales there.
Right. So how much would we add from the TMT bars in this financial year and next financial year?
Very difficult to talk out of specific numbers, but as I just pointed out a couple of questions back, if we assuming that we operate at about at very nominal capacity utilization this year, close to around 30-35% also if we assume, then we should add close to around 150 crores from TMT bars this year.
Okay. Okay. And the stainless steel would remain the same as you mentioned.
We definitely aspire that to at least remain the same, if not better it. That's what we would strive to achieve. But it would, a lot of factors like market conditions, etc., will play a role.
Right. Right. Okay, sir. Thank you so much.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Prakash Sharma, an individual investor. Please go ahead.
Yeah. Hi, sir. I have a couple of questions. So my first question is that in Q4, we saw good revenue. So just want to know what is our sales volume for this quarter?
Sales volume for the quarter was approximately, in terms of tonnages, it was close to around 16,500 tons, approximately.
Okay. And sir, what would be the sales volume for the whole year?
For the whole year, the sales volume was close to around 54,000 metric tons.
Okay. Okay. Sir, what would be your average realizations per ton?
It close to around 90 rupees is what stainless steel realization would be close to about 90 to 91 rupees.
Okay, per kg, right?
Yeah, per kg, yeah.
Per kg. Okay. And sir, just regarding that, so what categories of our products were sold or, saw high demand this quarter, this year?
No, so we were primarily only into one category, which is stainless steel long products, but we did push up some sales of stainless steel flat products also. We don't have a flat product rolling capacity in-house, so that sort of, makes it a bit difficult for us to sort of consistently supply and ramp up the capacity there. But as a strategy of product diversification, we got some billets sold to customers who in turn sort of, gave us the stainless steel flats, which we sold in the market. So yeah, as I said, as I said a couple of questions back, primarily the revenue of the companies were to the extent of more than 95% from stainless steel only. Other TMT bars we have just started to sort of, manufacture, recommenced in last month. So last month in April, those numbers are going to come in.
Okay, sir. And sir, lastly, we saw a betterment in the gross margins. So did we enjoy any inventory gains there?
Did we enjoy any inventory gain? No, so there's no inventory gain. There's no sort of any exception. The markets have been more or less stable, the prices. Rather, steel prices have been soft, going forward overall last year. So the realizations were better on account of, the spread between the raw materials and the finished products, and also, the savings that have started to flow in from the cost optimization and other modernization projects that we did last year.
Okay. Okay. Thank you, sir. That's it from my side.
Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Sagar Shah, an individual investor. Please go ahead.
Hello. Am I audible?
Yes, please.
Yeah. So just a few basic questions, sir, on this TMT unit. So what is the reason behind restarting this TMT unit, and what is the management plan for the same? Can you elaborate on the same?
Yeah, so we basically restarted it. Number one, to sweat out. We took a call that we wanted to sweat out our existing idle assets to the fullest. So we did an analysis that it would make sense to restart the unit because the return on capital deployed in that respect, because the unit was already in place, would be healthy for the company, because there was no major additional capital deployed in terms of capital expenditure towards restarting. Of course, there were need-based expenditures which were done, but nothing very significant. And second, the idea was, as a strategic point of view, we are looking at rolling out stainless steel rebars. So, and we think that is going to sort of gradually be ramped up. So restarting the unit gives us that cushion to mitigate our operating costs like fuel and power and manpower if we have a decent capacity coming in from this segment.
Oh, okay. That will be helpful. And second question is on that your expectation from the upgradation that you've done for the rolling mill done in April. What is your expectation from that?
See, the upgradation, we did two large projects last year. One was the modernization, which was required to sort of be in tune with the markets, because, we have to sort of compete with the competitors who may have put up more modern mills or more modern plants. So it was the need of the hour to keep our assets upgraded, which is going to be a continuous process. So, our plant is a very old establishment, and with the past stress that we had, over the maybe, prior to 2022, we were not able to upgrade the facilities the way we would have ideally wanted. But our team is very, very experienced. The basic infrastructure is in order, so we upgraded or maintain it at a incremental capital expenditure. So that's the need of the hour. Going forward also, we'll continue to do that, because, it helps us to remain efficient, and it's upgradation, debottlenecking is all the same. And the other project that we did was the cost optimization project, which is one of its kind in India. And those results have started to come in, and they are encouraging. So we did that, completed that project somewhere around August last year. And with the initial teething troubles and stabilizations, now results have started to flow in terms of savings in energy costs.
Oh, okay. And the third question is on this depreciation. So increase of depreciation is because of this upgradation of plant only, or is there any other reason?
No, it's because of addition of the fixed assets on upgradation and debottlenecking and modernization and various things that we continue to do.
Oh, okay. And last one from my end is more on the industry side, like this proposed import duty from the government. So how do you see the impact on the same for the next this financial year for 26?
No, as we said, because of the various tariff issues being imposed, by the US and China and otherwise, and other various geopolitical conditions worldwide, India is a ready market for all the steel majors to dump in material, because we are the only large economy which in spite of the problems worldwide, the demand for steel continues to grow at a very, very good pace here. We imported nearly 10 million tons last year, and so this safeguard duty was imperative, but it looks from our discussions with the larger producers that it doesn't seem to be sufficient to sort of really boost up the industry here, and it is required. The industry here needs to be boosted up to keep reinvesting and make India so-called Atmanirbhar. But yes, I think there are talks of increasing the tariff further, which I think is required.
Okay. That's it from my side. Thank you for the opportunity.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Mehul from 40 Cents. Please go ahead.
Sir, I have a question regarding the promoter history, because I am checking your website, and I can see that this is a Poonam Chand Rathi Group company, but there is no mention of the history of promoters, because I believe that Mr. Poonam Chand Rathi had established his organization long back. After that, can you just share how the promoters have moved on? Because there's no mention of anybody from the Rathi family in the board of directors. So we'll take a note of that. But I think it's driven by the promoter at the promoter level. It's largely my father, Mr. Pradeep Rathi, and myself, Udit Rathi. So the day-to-day operations and the overall company is being managed by professionals who are very, very experienced, and they are all very they've been there with the organization for a fairly long time. We've had some changes also. Our managing director
who was there with us for a very long time. He had some major health problems, so he sort of stepped down, and we engaged an industry veteran to sort of head the company on that front also. And the day-to-day operations are being held by them, wherein at the promoter level, I have been guiding them through the various troubles that the company went through over the last few years because of largely because of the steel plant in Odisha, which did not do well. So I was on the forefront to negotiate and settle terms with various creditors, along with the support of the team. And I have also recently joined the company. The company has appointed me as a Chief Strategy Officer, wherein my role will be to look at only basically growth opportunities and guide the team. But we are very happy with the way the routine operations and day-to-day management is being handled by the experienced team members, which has sort of shown in the results also, which we have delivered over the last few years.
Right. So, sir, two questions, follow-up question on this. So, who is currently managing the overall operations of the company?
So, the managing director has a team under him. So, if you look at the investor presentations and etc. that we've made, and the website also, each division has a unit head. We have a rolling division where it is headed by the president level person. They're all very experienced. And, we have very able and experienced people for taxation, accounts, and human resources. So it's being handled by all of them who report in turn to the managing director.
Okay. And what's his name? What is the name of the gentleman?
The MD?
Yeah.
Mr. Mahesh Parekh. If you could just go over the disclosures that we made, it's all taken care of there.
Okay. And sir, when did you join the company?
Myself? So I joined the company way back in 2005 or 6, I think. I sort of, initial years I spent in setting up of the Odisha plant.
Okay.
And even the stainless steel facility here, setting up of the projects was largely under me. But then I sort of, left the day-to-day operations to professionals, for the professionals to handle. And then, of course, when the company went through turmoil because of various external factors affecting the steel industry, I was sort of, being the promoter and sort of, guarantor to the lenders as well. I had to take the step to make an attempt to revive the company back, which with the support of all the stakeholders, I was able to do successfully.
Right. Thank you so much, sir, for all the transparent sharing. I will get in touch with Adfactors for a one-on-one call so that we can have a detailed discussion, and I will let this forum continue with their questions. Yeah. Thank you so much.
Surely.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Udit Rathi, promoter for Rathi Steel and Power Limited, for closing comments.
I thank the entire team of Rathi for their untiring efforts, hard work, and dedication, which drives the company forward through various market conditions. Also, I would like to thank all of you for participating in our conference call. Please do get in touch with us or with the investor relationship team for any further questions. Thank you so much.
Thank you. On behalf of Rathi Steel and Power Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay. Thank you.